Let's talk about Netflix and the potential future for the company and this stock. But let's start with a quick look at some financials. As you can see, stock price for the past 5 years has been lackluster if we count in the recent decline in share price. Almost $700 a share here before, the whole decline in the market, but currently price to earnings ratio of 26. And if we take a look at the quarterly earnings reports, we can see that in the past they had a earnings per share of 1.34 and quite low profit margin, but for recent quarters they improved this a lot. As you can see, about 3.53 earnings per share here, and most importantly, profit margin increased 7.88, 20%. That's a good increase. And then earnings per share continued to be around $3 a share, and revenue grew slowly here, 8%, 5% only. And with this slow revenue growth, the company is a bit expensive at this price to earnings ratio. It should be priced 10 something, in my opinion. However, there is a bullish case for Netflix. There's potential for them to see quite a big uplift in revenue, big increase in profitability as well. And talking about this whole industry, we can see that television is losing market share. And I read an interesting study from Denmark, actually, where they measured what young people meant when they spoke about television. And for us who's a bit older, we think about cable, the old channels, that you press on 1, 2, 3, 4, 5, on your remote control to get to. But a lot of younger people today, they see streaming and YouTube as television. And some of them, the kids, if you ask them what do you use the numbers on the remote to, they don't know. They only know the Netflix and the YouTube button on the remote. And we see this change in consumer behavior towards streaming and YouTube being more and more the new normal. And I think the big potential uplift that will be very bullish for the streaming industry, because there's a lot of competition now with Netflix, Hulu, HBO, Amazon Prime. We have all of these companies, and Netflix, they're losing their deals to have the only right to Disney movies and this kind of stuff. So we're having all different services, and if profit margins decline, if revenue decline, then the potential uplift can come from advertising. So you pay a subscription and you have ads, and if everybody does it, then it's the new normal. And of course, maybe you can pay an even higher price, like a premium plus subscription, and then you won't have ads. But there's potential for a big uplift in revenue and profitability if all the streaming services decide to go this route. And since they're companies and they have a duty to shareholders to increase profit by as much as possible, in my opinion, I think this is the route that we will see the streaming industry take. And then the 26.11 price to earnings ratio for Netflix is potentially a lot more attractive. But this is not a cut and clear case. This is a very difficult case, and there's a lot of uncertainty regarding the direction of the stock price. We could see sluggish growth in quarters to come, and then I think that share price will be hammered even more. Or we see a bullish case with more uplift and advertising coming as part of the service to increase revenue even more, and then the company is cheap. So this is really hard. This is a crossroad, and I will not make an investment in Netflix because I think that it's hard for me to judge the risk to reward ratio, even as somebody who's working in the advertising industry. I think it's very hard to predict the future in this case and see where share price is going for Netflix. That's been my opinion on Netflix stock, and as always, hope you make a ton of money whatever investments you decide to make. Take care now. Bye bye.